Florida's housing market isn't just slowing, it's cracking. New 2026 data reveals falling prices, rising inventory, and warning signs most headlines ignore. What's happening now could reshape Florida real estate for years. If you think the crash is over, this data proves otherwise. Why everyone's talking about a Florida housing crash in 2026. Florida housing is under pressure from multiple forces hitting at once. After years of fast growth, prices climbed beyond what most buyers can afford. At the same time, inventory is rising, meaning more homes are sitting unsold. Sellers who expected quick profits are now cutting prices. Insurance costs, property taxes, and HOA fees are also rising, making ownership harder. Many people who moved to Florida during the boom are now rethinking their choice due to higher living costs. Investors are pulling back, which removes a major source of demand. Builders are still completing projects started years ago, adding even more supply. This mix creates downward pressure on prices. That's why analysts, buyers, and sellers are watching 2026 closely. Home price forecasts and what they really mean. Fresh 2026 forecasts show slower growth or outright price declines in many Florida markets. Statewide averages hide the real story. Metro-level data shows big differences between cities. Some areas may see single-digit drops, while others face double-digit declines. Forecasts are based on sales volume, inventory growth, and buyer demand, not fear. When prices fall while listings rise, it signals weak market balance. Forecasts do not mean every home loses value. Location, home type, and condition matter more than ever. New data also shows longer days on market, which gives buyers more power. These numbers suggest 2026 could favor buyers with patience and cash. Which Florida cities are at highest risk of price drops? Not all Florida cities face the same risk. Overheated markets are the most vulnerable. Cities that saw huge price jumps from 2020 to 2023 now face stronger corrections. Areas with heavy investor activity are especially exposed because investors sell quickly when returns drop. Cities with high insurance costs and flood risk also show more weakness. Places where incomes did not rise with home prices struggling the most. Suburban and vacation-focused areas may see larger drops than stable job hubs. Markets with excess new construction face extra pressure as supply grows. Price cuts often start in condos and move to single-family homes later. The condo market. Florida condos are facing unique problems that single-family homes avoid. New safety rules mean mandatory inspections and costly repairs. These expenses raise monthly HOA fees, pushing buyers away. Many owners cannot afford higher fees and are forced to sell. At the same time, condo inventory is rising fast, especially in coastal areas. Investors are exiting because rental profits no longer cover costs. Older buildings face the biggest drops since repairs are unavoidable. Buyers now prefer newer or detached homes to avoid surprising expenses. Condos also struggle with insurance hikes that hit shared buildings harder. As more units hit the market, prices fall faster than houses. This makes condos the weakest segment in Florida housing. Until costs stabilize, condos may continue leading the downturn in 2026. Mortgage rates, affordability, and buyer demand trends. Going into 2026, mortgage rates remain a major obstacle for Florida buyers. Even small rate changes can add hundreds of dollars to monthly payments. High rates combined with high prices reduce buyer affordability. Many first-time buyers are priced out completely. As demand drops, sellers lose leverage. Some buyers wait for better rates, slowing sales further. Affordability indexes show Florida is now harder to buy in than many other states. Investors also step back when borrowing costs cut profits. Cash buyers still exist, but they negotiate aggressively. Lower demand means longer listing times and more price reductions. If rates stay elevated into 2026, demand may remain weak. This pressure does not cause instant collapse, but it supports a slow correction across much of Florida's housing market. What rising listings tell us about the market? Florida housing data shows active listings climbing month after month. When supply grows faster than sales, it signals weakening demand. Many homes now sit longer, leading to price cuts. Sellers who listed expecting fast offers are adjusting expectations. Rising inventory also means buyers have more choices, which reduces urgency. New construction completions add even more supply, especially in suburban and coastal areas. At the same time, closed sales are falling, showing fewer buyers are willing or able to commit. This gap between listings and sales creates downward price pressure. Builders may offer incentives, which pull buyers away from resale homes. Higher inventory does not mean collapse, but it shows the market is shifting. These trends suggest Florida is moving away from a seller-controlled market in 2026. Insurance and ownership costs eating into demand. Insurance costs are becoming a major barrier for Florida homebuyers. Property insurance premiums have surged, especially near the coast. Some owners face policy cancellations, forcing them into expensive replacements. Rising flood insurance adds another layer of cost. These expenses push total monthly ownership far above mortgage payments. Buyers now calculate all-in costs, not just home prices. For many, ownership no longer makes financial sense. Investors feel the impact too, as higher costs reduce rental profits. Condos and older homes face the largest increases due to risk assessments. Lenders also factor insurance into approvals, limiting buyer access. As costs rise, demand weakens. This creates more listings and slower sales. Insurance pressure is a key reason Florida housing faces stress heading into 2026. Migration patterns and population shifts affecting Florida's real estate. Florida saw massive population growth during the boom years. That trend is now slowing and changing shape. Fewer high-income remote workers are relocating, reducing buying power. Some residents are leaving due to cost of living pressure. Retirees on fixed incomes feel the squeeze from rising taxes and insurance. New arrivals are choosing renting over buying, which limits home demand. Migration is also shifting toward cheaper inland areas, leaving premium markets exposed. When population growth cools, housing demand follows. Builders and investors who relied on nonstop growth must adjust. This shift does not reverse Florida's long-term appeal, but it weakens short-term demand. Changing migration patterns play a quiet but powerful role in Florida's housing outlook for 2026. Comparing 2026 crash fears versus official forecasts. Public fear often spreads faster than data. Many forecasts do not predict a total collapse. Instead, they point to a market reset. Official projections suggest flat prices or moderate declines in most areas. Some overheated cities may fall more sharply. Economists track employment levels, income growth, and credit quality, which remain stable. This limits extreme downside risk. However, forecasts also warn of long recovery timelines. Prices may stagnate for years rather than rebound quickly. Fear-driven headlines focus on worst-case scenarios, while data supports gradual correction. Understanding this difference helps avoid panic decisions. The market may feel painful without becoming catastrophic. Florida housing in 2026 sits between balance and stress, not total failure. What this means for buyers, sellers, and investors heading into 2026. Buyers gain more power in 2026. Higher inventory allows strong negotiation. Waiting and comparing options becomes valuable. Sellers must price realistically and prepare for longer timelines. Overpricing leads to repeated reductions. Investors need to focus on cash flow, not quick appreciation. Risk management matters more than growth. Location, insurance costs, and rental demand should guide decisions. Flipping becomes harder as margins shrink. Long-term strategies outperform short-term bets. Everyone must rely on data, not emotion. Florida real estate is shifting into a slower phase. Success in 2026 depends on patience, planning, and understanding real costs. Those who adapt can still find opportunities in a changing market. Florida's housing market is changing fast, and 2026 may be the turning point. Stay informed, watch the data closely, and don't rely on old assumptions. Subscribe for real housing updates, like the video if this helped, and comment what you think happens next.